with respect to export, the puzzle is that despite the fall in import, there has been a surge in export. That is largely because of the global shortages and the fact that some exporters in India still have inventories to sell and have larger margins, especially with respect to the SEZ. So there is an opportunity that some refiners may have actually seen, and as a result of that, there is a phenomenon or contrasting phenomenon of declining imports and rise in export.
Hello and welcome to Macro Deco. As you all know, since the start of the Iran war, crude oil supply has remained uncertain. Crude and petroleum imports were down 35% in the month of March, and this squeezed the availability of petroleum products in the domestic market. However, oil marketing companies continued export of petroleum products, and exports of these products even increased by 5.88% in March. To talk to us about this in detail, we have Dhananjay Sinha, CEO and Co-Head Institutional Equities, Systematix Group. Welcome to the show, sir.
Thank you, Sangeeta. Go ahead.
Yeah, we are seeing a peculiar situation. As I just mentioned, crude imports are down. The country is scrambling for petroleum products, and the exports have increased in March to $5 billion. What do you have to say about this situation?
There has been a significant drop down as far as the supply from the Middle East is concerned. I think that reflects in a sharp drop in the imports of crude, and that, of course, is having an impact on the supply of fuel in the country. And as of now, it is impacting largely the industrial usage, and all government has restricted usage of the gas for industrial purposes, and also for the industrial purposes and commercial purposes. There has been an increase in prices of diesel, etc. However, with respect to export, the puzzle is that despite the fall in import, there has been a surge in export. I think that is largely because of the global shortages and the fact that some exporters in India still have inventories to sell. And you have larger margins, especially with respect to the SEZ that we have, where certain private companies can export. So I think there is an opportunity that some refiners may have seen, and as a result of that, there is a phenomenon or contrasting phenomenon of declining imports and rise in exports.
Right. Which are the main companies which are exporting petroleum products, and where are they exporting to currently?
As far as the public sector companies are concerned, they have been exporting. HPCL, BPCL, IOC. Earlier they were exporting, but I would suppose that because of the domestic shortages, these may not be the companies who are exporting. I think the private companies, the Reliance Industries, Jamnagar, it leads that exports. And also you have Naira Energy, which is also another private company, and the destination includes Netherlands, UAE, Singapore, Malaysia, Africa, and some parts of Europe as well.
So the government had imposed windfall taxes on OMCs to curb exports. Recently, it has increased the taxes also. Why did the windfall taxes fail to check exports? And will the increase now in the rates have any impact on exports going ahead?
Earlier on, also there was a sort of windfall tax on exports, so of the order of 21.5 and 29.5 rupees for diesel and ATF. So I think that was actually on the lower side. The refining margins that were available globally were much higher. As a result of that, it was still lucrative, notwithstanding the increase in the export tariff, that companies were able to export.
Now that they have increased the tax rates recently, will it check the exports?
See, it all depends on the market scenario. So right now, it is at 55.5 rupees and 42.2 rupees, almost like a significant rise, I would say. With respect to diesel, it is almost like more than double. And there is a significant rise on ATF to 42 rupees a liter versus 29.5. So there is an attempt to sort of curb that export and reduce the incentive, but it all depends on how the global scenario points out. If the global margin is still lucrative, there can be export. But I suppose the government must have calculated what can be a sort of a level after which it may lose incentive. So I think current levels might might impact your export performance as far as the refining products are concerned.
I diesel and ATF only. Why can't they have for taxes on all the products which are being exported?
So I think they may have actually decided based on where they see the bigger risk, especially in the context of domestic supply. So these are the two products in which there might have been an increase in exports significantly.
So as you mentioned earlier, Reliance is the one of the leading companies which are exporting petroleum products, and a large portion of exports by Reliance Energy is exempt from these windfall taxes because special economic zones do not come under the tax net. Can you
Right.
elaborate on how CZ got such an exemption? And don't you think when government levies a tax to check exports, it should be levied on everyone alike?
The SEZ has a contractual understanding. So I think there is a certain judicial ruling and for the SEZ status, which exempts them from the windfall taxes. So I think you have a parallel sort of price mechanism, one where non-SEZ supplies are going as exports versus those that are coming from SEZ. It is largely because of the judicial that have been given to the SEZ company. So I think they might be deriving better profits in this whole scenario.
For
Right.
both the domestic market and even for exports, actually we are importing crude oil. So why
Correct.
shouldn't the taxes be on everyone alike? Like
I think the issue might be with respect to attracting investments in SEZ, and they may not be wanting to alter that in the current scenario to discourage investment. So I think that might be a long term strategy. But I would say that in a scenario where you have a sort of emergency like scenario and you have a sort of significant shortage domestically, I think from time to time, government can take a sort of a special measure to equate the impacts such that the domestic supplies are actually maintained. I think if you look at it globally, other countries have also implemented certain export limits or export constrictions. Russia, eminently as an example, has done that, and other countries are also using other means to contain exports.
so recently, the government has made excise duty cuts for oil marketing companies. This is for to cushion their margins. But if you look at the balance sheets of these companies in the
Right.
first half of last fiscal, these companies had a combined profit of around rupees 34,000 crore. Tell me about the rationale behind this duty cut when they haven't actually passed on the benefit of getting discounted Russian crude oil to the consumers. Now they are being given excise duty cuts when the prices have gone up.
With respect to the Russian supply, and I think the benefit that was available, like the government had actually increased the excise duty. So essentially, that benefit was not passed on to to the consumer. As a result, it actually translated into a better revenue collection for the government. Like even in 2014-15, if you recollect, when the crude price fell from about 110, 120 to almost like $60, the government had increased the excise duty such that the benefits were actually retained by the government as tax revenue, because the government is also grappling with tax collections. In the current scenario, because of the rise in crude prices and the fact that the retail prices have been kept unchanged, it is translating into under recovery. So essentially, the excise duty cuts are done to ensure that some of under recoveries are compensated. So in a way, indirectly, the government has actually funded some of the under recovery through foregone taxes. With respect to the profit that they managed earlier, it was also to do with the fact that there has been a high level of margins that we saw in the previous 3 quarters. In the current context, definitely they are seeing an under recovery for which the government is trying to sort of compensate. The thing is, it doesn't really help in the sense that it's the money going from one pocket to another. So if there are under recovery, the profit of the OMCs would be lesser, and the dividend payout from these PSU companies to the government would have been lesser. So what really happens is that you are actually curtailing some of your taxes and sort of compensating for the potential loss in dividend payout. So I think that is what the this whole process is all about.
Right. So, what should the government do now to check the exports, and ensure that fuel availability is there in the country? Also, you mentioned little while earlier that countries, including Russia, some of the countries in the Asian neighborhood, they all have been suspending their exports during this crisis, at least till the crisis is there. In this point of time, what should the government do?
This is a very dynamic situation. The government should actually have a sort of a dynamic price mechanism, look at the ratio of shortfall and export can be done relative to the shortfall. If the ratio of shortfall is very large, you can have a sort of a formula through which the export duty also for the SEZ can be imposed for a short period of time. The other thing that the government can do is to create export quota such that you can limit exports. Other countries have sort of halted exports. Some of these innovative ways will need to be thought about if shortfall becomes intensive and becomes prolonged. As of now, I think they are working with the assumption that the problem might last for a few months, maybe 1 or 2 months. In the second budgetary demand that were placed about a month back, the government had sort of placed before the parliament an additional expenditure of 2,80,000 crores, out of which 1 lakh crores was earmarked for economic stabilization fund, which was nothing but allocation for any difference in prices and because of the rise in the crude prices, global crude prices, and the domestic product prices. So I think if you look at it, our calculation is that if the crude remains at $100 for a 1 year period, the import bill would rise by roughly about $100 billion or 10 lakh crores. It is going to be significantly higher than the 1 lakh crores that the government had provided for. So if I assume $100 uh, per barrel average for a year, 1 lakh crore will be roughly covering about 1.5 months of import. So, but if it is a prolonged situation, you might require a stronger sort of measure to control exports. Isn't it, what government should do at this point of time is suspending the exports itself for some time so that, there will be some kind of stability in the domestic market. Even Russia has done it. Russia is a big producer of crude oil. So can't we do it until there is some kind of stability in the horizon with regards to the Iran war? Yeah, I think those considerations must be there in the minds of the government and policymakers. And definitely they might be thinking about how one can address the supply shortage. This question is relevant also because the strategic reserve for India is actually fairly low. So I think if this situation prolongs for, let's say, more than 2 months, I think there can be a much more serious situation. At that point of time, the government might actually think about what to do with the export situation, whether to sort of create a quantitative limit for exports or totally stop that. So, what I'm sure the government is thinking about it in a serious way. So the other alternative that the government has in addressing the supply shortage is to reconsider or agreement with the US with respect to the import of crude from Russia. As of now, there are conditions imposed by the US government through the that is in the process. That can be renegotiated given the context that the reciprocal tariff regime has been vetoed by the US Supreme Court. It doesn't apply. So it will be relevant for the government to reconsider this aspect of the trade negotiation. If that happens, that can ease the supply pressure Thereby, you can be less worried about exports.
So that was Mr. Dhananjay Sinha. He was telling us that government should actually look at this situation beyond the a temporary, outlook, because we never know. It is very uncertain how long this war will prolong and whether we will meet our energy requirements till then. That should be the priority of the government right now. Thank you for joining me on the show.
Thank you.